Hi, John. Hi, Steve. The spring real estate market has come and gone. Tariff threats, trade challenges still exist. Give us an idea of what the first half of the year looked like from your vantage point and what things look like right now in the real estate market. John, let's start with you.
I mean, the real estate markets is about as cool as the weather in Toronto over the past month and a half, which is to say it's quite chilly. It is quite cool. We're not seeing a lot of activity. I mean, sales in the Toronto area, quite frankly, have been pretty much at a 30-year low for the past couple months. A lot of buyers just moving to the sidelines, anxious about the economy, anxious about jobs. If they need to upsize, they're worried about their ability to sell their home. So it's a very, very soft market right now in the Toronto area.
Steve, what have you been seeing and how do things look right now?
Yeah, I'd say it's pretty much the same thing. I think that if you look at, we almost have the end of the month here for May. So if you look at the first sort of 5 months of home sales across Greater Vancouver, they're coming in at levels, the lowest levels we've seen in 20 years outside of the pandemic, right? Of May or of 2020. So we're running at basically, I would call it like crisis levels of home sales or crisis level of demand. And what we're seeing is new listings have been above long-term trends. And what's happening basically is instead of, a home taking 2 or 3 weeks to sell, instead it's now taking 2 or 3 months to sell. And so what happens is basically all this inventory just starts to slowly accumulate on the market to the point where some submarkets in Greater Vancouver are now seeing all-time record highs, particularly in the condo segment, where we've been building a lot of investment properties. So that's kind of the story today: weak demand and lots of inventory.
Let's just unpack some of that. There was this notion that lower rates by the Bank of Canada were somehow going to re-energize the market. Rates have been higher for longer. John, when you take a look at that Toronto market, Steve just talked about what's happening in Vancouver. What are you seeing when it comes to supply, inventory levels, and demand?
So, I mean, similar, yeah. Inventory levels are pretty much at the highest we've seen in quite a long time. I mean, houses have almost 5 months of inventory. Condos are almost at 8 months of inventory. Lower rates have not stimulated housing. I mean, I think if we rewind 6 months ago, I think the sentiment in Toronto was that the market was going to be busy this spring. It has not materialized. And again, it doesn't really matter how rates go. If you're worried about losing your job, you're worried about the economy, you're not rushing out to buy a home. So all of these other economic factors are outweighing, even if we did see a bigger decline in rates in the future.
Let's talk about what's happening in the condo market. Steve, you had mentioned the challenges that you're seeing from your vantage point. Can you just unpack what that might look like as we maybe bring in that conversation about rentals? Is it condo and apartment rentals versus more an actual single family dwelling? What are you seeing? Are there any differences there?
Yeah, I mean, I think the biggest weakness today is in the condo segment. I mean, if you look at what we've been building over the last 10 plus years, it really has been condos, right? In Vancouver, we just don't build single family homes anymore. They're just not practical and there's nowhere to build them. So what we do is we round up those houses and we tear them down to build way for new towers. And so what we've seen is right now you've got a record number of new condo units under construction, a record number of new rental apartments under construction in a time where rents are actually declining. They're probably down about 10% since peaking roughly 18 months ago. And so this is all coming, all the supply is coming online at a time when you already have sort of bloated inventory levels. And that's really particularly concentrated in that condo segment. And if you kind of look at the submarkets of where these developers have been building the most, in places like Burnaby, Surrey City Central, where you have all these towers going in, you have all-time record high levels of inventory currently for sale on the resale market. And you still have a record number of units that will be completing on the new construction side that will only add to those inventory levels in the resale market.
John, what are you seeing when it comes to the condo market, the rental market?
So rents have been dipping a little bit. I mean, the condo resale market, much like Vancouver, is very soft. And in particular, the smaller units. Larger units are moving a little bit better. They're targeting end users. The really small condos are targeting investors. So the market remains very soft for demand from people buying. And the rental market has seen prices dip a little bit. We've seen a flood of completions over the past year and a half or so. And this has put downward pressure on rents. Some landlords offering a month free rent just as an incentive. So definitely more options if you're renting in Toronto right now.
Let's just go back and take a look at the fundamentals here. John, you had recently written a piece, "The Great Sell-Off." Let's just wrap up on that, where you talked about using your home as a financial tool, a financial investment tool, which has now become number one, out of reach for first home buyers, and number two, which has really distorted the market. Just take us through that a little bit, and I want to ask Steve his thoughts on that as well.
Yeah, I mean, if we rewind the clock 20 years ago, homes were shelter for households. There was their primary residence. It was a long-term retirement asset and vehicle. And in the past 20 years, what has happened is they've become a store of value, kind of a lot like gold. People during a period of very low interest rates funnel tons of capital into homes, investing in single family homes, investing in condos. And yes, this contributed to rising prices, has made it harder for end users to buy, kind of distorted the incentives when we think about how people invest their money in Canada, investing in passive investments rather than businesses. And I think all of these dynamics are not great. And kind of one of the factors, there's no single cause for housing affordability, but it's one of the negative factors that has distorted, I'd say, the housing market in Canada.
Steve, the final word to you, your thoughts on investors in the real estate space.
I think it's always going to be prevalent. I think to John's point, though, is like the investment side has been supercharged over the last decade plus in an era of, negative interest rates, where people are forced out the risk curve, where you can't earn any money in a savings account. You go out and you go buy a secondary condo. And that's exactly what we've seen, right? So I think that as we've talked about, higher for longer rates, 2% mortgages are now looked for. All of a sudden, people are looking for alternatives. And so we've seen the demand side on the investor side really be impaired, which is to say that nothing really works anymore. Condo units don't cash flow. Mortgage rates are more expensive. Rents are declining. And so the investors have kind of bailed ship. I think at some point they'll be back, but the math has to start to make a little bit more sense. And we can start earning, again, a higher rate of return in more safe vehicles where you can actually generate, a return on your savings again. I think people are looking at alternatives and saying, maybe I don't need a third and fourth condo. And so I think that's where we're seeing, of course, the demand has pulled back and the inventory is stacking up.